Hello and welcome this week, everybody, to the Middle Class Investor. This is Seth, your host. It is Saturday, May 18th. It's about 1:30, and I'm sitting down to do the recording. The last 2 weeks were very similar. We had very large ranges, but between the open and the close, not much happened. So usually that feels like a not much happened day. Let me zoom in here a little bit and talk a little bit about it. But I've got this expanding triangle drawn in here in red, and I'm expecting this to make its way up here and then down here like so. But I mean, the other possibility is that this is close enough, and this is just gonna make its way down here like so to around 2300, taking out this old low. And then this whole formation here, this whole sideways pattern would be a wave 4, which means we would have a wave 5 up into 31, 3200, something like that. Okay. Now, like I said, the other possibility is I guess there's two, but they're kind of all the same. The other possibility is that this is 4, ABC. This is 4 here. And this is a little 4 pulling back, and then that's going to be 5. And if that's 5, then the result is the same. The difference is you would come here first, and then here, and then up a little bit, and then down. So, but they're basically the same formation. Sorry about the dog barking in the background. She barks at lawnmowers and all kinds of stuff. So anyway, that's what I see in the S&P 500. There's still quite a bit of bullishness. This could take some time, although this has taken some time. I mean, this is 2018. Basically, the market's gone nowhere since the beginning of 2018, which is, that was quite a bit different than between 16 and 18. So anyway, it's just this is kind of the way the market is. I mean, you have multiple combinations. One of the things I like to do, though, is I like to look at it in terms of where am I closer to resistance or support. Let's say I'm saving, $500 every 2 weeks in my paycheck, to put into my 401k. Well, I don't just have it go directly, divided up into my stocks and stuff in my 401k. I have it go to a cash account, and then when I get to support, when I get to a place that's support, like here, for example, sorry about that. Let me get this zoomed in right. Okay. So let's say I've got, I'm putting $500 every 2 weeks in my 401k. I don't just put that money in here and dollar cost average down. I wait until we get to an area of support, and then I put it in here. And that way, I'm less likely to lose some of it. Now, I mean, it's possible that it goes up and then comes down, but isn't that better than losing from here to there and then from here? I mean, basically, if you do dollar cost average down, you're losing money from here to here, that $500. Then you're losing the money from here to here, that $500, and then money from here to here, and then money from here to here. Whereas if you did it here, if it rolled up and then rolled down, you're only losing money from right here. So I don't know. I just think it's a better way. Buy at areas of support. Don't put new money to work when you're this close to overhead resistance. I think these are good rules. And you can follow them or not. It's up to you. It's your money. You get to decide. But let's look at the 10-year Treasury, because I think we're really close here. Maybe one more little shot down move, and that might be it for the bond market. We got a lot of support right here. Let's take a look at this. There's a lot of support in this area right here. A lot of congestion. This is known as congestion. creates a huge area of support. So we could get like another just another low right here, just off this pivot here. Could sell off down into here a little bit, and that might be the last low. I don't know. I thought this was, because we had good support here. We had good pivots here, and here, but we got good congestion area here, and this appears to be some sort of fourth wave. So, and you know, the possibilities it could roll all the way back to here. So, but it looks like to me, and I'll show you a chart in a second, why I'm thinking this is probably just about it. The volatility in the bond market is at an all-time low. So that usually means there's going to be some sort of reversal soon. So I'll show you that chart in a second. Let's look at the 13-week Treasury, which tells us what the Fed is doing. And we've been in this range for a while. Let's extend this out. And it really hasn't changed any. We're right in the middle of the range right now. And like I was saying before, until we break out of this range, either above or below, expect the Fed really to do nothing. I don't think they watch the markets even closer than you and I do. So I wouldn't expect a whole lot to happen here until we break out of this range. All right, let's look at the Dow. The Dow's a little bit different than the S&P. It didn't, it didn't make a new high. The S&P made a new high, but the Dow did not. The Dow is still kind of floundering around in this area, which makes a really good case for this being 5 instead of just D of 4. So we'll have to keep an eye on that. Also, the NASDAQ also, it made a new high, but it doesn't look like it's following the same kind of pattern. So if the NASDAQ and the Dow top and start rolling over, the S&P will too, but it may take a slightly different shape. We'll just have to pay attention to that. But this does look like, if you look at it just kind of loosely, it does look like a 5-wave move, here to here. And so, this could very well be 4, and this could be 5. So we'll just have to wait and see. If you look at this, very much has an A, B, C look to it, which could be 4, and this could be 5. Now, 5 is pretty short. I mean, this could just be 1. I mean, look at this. This went from January 2018, all the way to December 2019. So it's a whole year. And then, this has only been about a half a year, this formation here. So I don't know. We'll just have to wait and see. But I just wanted to point out that it does look different. Okay, the German index pulling back a little bit. Japan pulling back. United Kingdom pulling back. Everything's pulling back. I think the markets, the U.S. markets and the overseas markets are somewhat tied together. I think we're in a like an unusual place where everything is going to be kind of connected and going down. There's only going to be a handful of things that are going up when everything else is going down, and we'll try to sniff those out here so that you'll have a place to put money. Because in general, in your brokerage accounts or your 401k, it's generally easier to be long, i.e. in the direction of up, than it is to be short anything. So the 401ks generally don't allow for short positions. All right, let's switch over to the TOS charts real quick. And let's look at a couple of things there. We got the ES up right now, but let's look at oil. Oil's been moving. Got a little rally going on oil right now, but could be counter trend. We had this long move up in oil. Well, let's back up. Let's take a look at oil on a 20-year. So, the question is, what do we got going on here? Well, it's some sort of pullback, so ABC, so A, B, and then C. The question is C over? If A started back here like 1, 2, 3, 4, 5, and this is a larger degree 4 because maybe this is a 1 right here, so maybe this is a, 1, 2, 1, 2 kind of thing. And so it looks like to me that oil is in this large consolidation pattern, and it might not be. It's possible that it's not, but if it is, and oil looks like it's wanting to roll over here, we should see oil back down here around the mid 30s, mid to high 30s, 37, 38, in this leg down of this move. This would be right here, which I've got drawn here, but drawn early, where this is ABC. So ABC, ABC, and then so on and so forth, until you get to the final move, and then there'll be one last burst downward that would take out this low, and then off to the races to the north. So that's what I'm looking. That's what I see in oil. Let's see gold. Gold's basically at a turn as well, or it's at a point where we got this little support area. It looks like it wants to go a little lower, and then we could see gold, up in this area around the 1450 area. So if you're looking to buy gold, then I think right here is a great place to, to get a little bit of gold. Of course, it's your money. You do it with what you want, and trade your money the way you see. Silver now, on the other hand, looks like it's in a little bit different pattern, but is also trying to make a low, and it's had this little last minute burst to the bottom. And the question is it going to make a new low? And the answer is I don't know. So you could hold out for silver down here around the mid 13s, or you could just say, well, I want in. I'm going to buy some silver. I know we're closer to support than we are resistance, as you can just see here by the chart. So if this is A, B, C, so we're going to finish some sort of C, and then go lower in a new C, so a new C wave. So we could take out this low right around this pivot here. We could take out that low, but that low is at 1390. Let's call it 1375, and this low is at 1440. So you're talking about a difference of about 50 cents thereabouts. So, and it depends on how much you're buying. That's an important amount to you. All right, let's look at. I want to look at the euro here. I'll tell you what. Let's just switch over to. Let me just switch over to these charts. These are my NinjaTrader charts, and this is the euro US dollar. And you can see we had a pretty solid move down, and then we kind of in this little chopping move where it looks like it maybe wants to go a little lower, maybe take out this low by a little bit. The larger degree trend is down. You can see here with the red. So, I don't know. It's to me, this is not one of the clearest charts in the Forex market. So let's look at a couple that are more clear. Let's look at the Australian dollar, US dollar. And what am I on, a weekly? Hold on a second, it's not coming. There we go, it's coming up now. Okay, so one of the things I wanted to point out on the Australian dollar, US dollar, is see this move right here? We kind of got an ABC forming. So if I click, what the pattern is, you can see that we're in this ABC pattern. So, if you wanted to trade the Australian dollar, US dollar, and you kind of see this ABC pattern working, let's go to the next time frame lower, which would be a daily. And what we want to do is look for a trade setup. Now, if we take out this low, then all bets are off on the larger degree ABC, and it could be that it still has to go lower because this is the ABC, A, B, and then C to take out this low here. And in fact, you do see that sometimes. Sometimes the wave B low. Let's the wave A low ends up being support. So if I clicked on that, and see we're below that already. So I don't know. Maybe we do make a new low in the Australian dollar, US dollar, but this is a great place to. You can see this looks like this is maybe done going down, and it could start curling back up. And what you might look for on the daily is a candlestick pattern that tells you it's a good time to enter. So let's just look at that real quick. Let's say we got a doji here like this, and then we really didn't make a new low, but then we got a candle like this. Well, that's an entry right there. Okay, that's an entry. And when you go back to the larger degree pattern, which is in the weekly, you want to look for where resistance would be. And resistance would be, maybe either this pivot or this pivot. So let's see. Let's take it. So either there or even here, if you were a little bit more aggressive. Either one of those places would be good places to attempt to get out of your trade. So from here to here, that's a pretty good move. From here to here is even better. So keep an eye on the Australian dollar, US dollar. Now let's look at. There was another one that I wanted to show you that was. It's the Euro JPY. So we're on a weekly again. And same kind of thing, we see this fairly strong move off, and then we see this ABC pattern coming back. And so, if we put a DP right there on that, okay, and then we go down to a daily. You can see we're right there on the larger degree support area, and if we start seeing some buy candles, then you might want to go long the Euro JPY. All right, I want to show you this stuff in the bond market. Whoops, that's not what I wanted to show you. Let me just was looking for some tires the other day. Yeah, here we go. So this is the bond market volatility. It says collapses to record lows. So they've got the record low marked on there. And I think I talked about this a couple of weeks ago. We looked at the volatility on the equity market, and it was really low. And I said, we're probably going to see some volatility. And sure enough, we saw some volatility. So it's not hard. It's just it's probability, right? If you're in this lower range, or you're setting record lows in volatility, well then probably, probabilistically, you're going to see a spike in volatility. You're going to see a rise in volatility, because volatility doesn't just stay low forever. It swings back and forth, just like you can see here in these pictures. And the bottom line is you got to keep an eye out for things like this, because this is the kind of thing. I think I've mentioned it to you before. If there's $1,000 in the market, and we've got, let's say you got 10 investors, okay, and they all have $100 in. Well, if I'm at 90% bulls, what that means is that $900 out of that 1,000 is on the bull case. Or let's put it this way, 9 trades out of 10 is on the bull case, but 90% of the money is on the bear case. And the market always gives way to money. I don't know if that makes any sense. So if I had $1,000 and I was at 90% bulls. That means 9 out of 10 traders, 9 out of 10 investors is bullish. Okay, but the way that works is the $900 doesn't correspond to that 90%. It means 9 out of 10 traders are long, but that 10th trader has $900 on the short side. And the way the market works is it always gives way to where the money is. So if the money is on the short side, then it's going to roll over and go short. Okay. Let's see what else we have in here. I think there was a couple other things that I wanted to show you. Here's the 5 waves up in the Dow, showing that it could be complete. And I want to stress could be, because it also could not be. There was one other chart in here. Yeah, so here's the bond market. So you can see what we're looking at here is there's a clear 5 wave down here, 1, 2, 3, 4, 5. So clearly the trend is down. And the question is, you know, what is all this garbage here? So they're drawing it as a 2 and then a smaller degree 2. And so now if we take out this high, this wherever this 2 is, if we take out this high, then this pattern is no longer valid, although it wouldn't be too far. Maybe this would be A, B, C, where C is slightly higher than this, where they've got 2 marked. Okay. All right. Here's gold. We talked about gold. We talked about it pulling back a little bit more, and then boom, we got a C, maybe to 1450 or so. And then the U.S. dollar, they're showing the U.S. dollar to go somewhat higher here, which makes sense based on some of the charts we looked at, if you think about it. And then crude oil, they're saying, you know, what they're saying is it's basically over right here, and that this should start rolling over and going to the downside. So a lot of interesting things. I think we're at a real pivotal moment in the market. I think it's going to be quite fun to observe and to listen to the media and all that stuff. They're not so good at handling, you know, panic in the markets, and it's always entertaining. All right, everybody. Listen, I wasn't here last week. It was Mother's Day, so I hope all you wished your mother a happy Mother's Day. And for those of you that are mothers listening, hope you had a happy Mother's Day. So, all right, everybody. Well, listen, thanks for coming in. We'll talk next week. See you then. Bye.